please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. It's 12 noon. We're halfway through the trading session, and so far it's been a stable session of gains, led by gains across the Asian markets. Most of them are shut. Hang Seng, the Chinese markets are closed for trading, but the ones which are trading, like Korea, Nikkei, the Singapore Times, Straits Times, they're all up close to about 1.5 to 2%, and gains are led by the metal sector. In news coming in, the Delhi High Court will be hearing Daiichi's plea against the Fortis Manipal deal on the 25th of April.
It will be all eyes on RBI Governor Urjit Patel as he announces the first Monetary Policy Committee decision for FY19. Lata joins us with all the key expectations. Lata.
Well, I'll start with the non-expectations. No rate action expected, neither hike or cut, so status quo policy. Now, a large part of our poll respondents said that even the growth forecasts and the inflation forecast would not be changed. The current GVA forecast is 6.6 for the year that went by and 7.2 for the current year, FY19, split as 7.3 to 7.4 in the first half and 7.1 to 7.2 in the second half. If perchance this is lowered, then it will be seen as dovish, but a large portion don't expect any change. Inflation forecasts, again, for the current year, first half, the current forecast is 5.1 to 5.6, and second half is 4.5 to 4.6. If that's raised in any fashion, it will be taken as hawkish. So those are the numbers that you have to watch out for. But as we all know, this is the first policy, and there are banking and regulatory policies that are also announced. So any hike in the FPI limit, as it is called, which is the foreign portfolio investors limit in buying bonds, government bonds, will be very important. At the moment, it's limit up. So anything that's it's opened up, safe. At the moment, the limit is, say, 5%. If it's opened up to 6%, that will be seen as very positive. Apparently, the government is even pushing for 7%. The other point that will be closely watched is whether any changes are coming to the rather stiff NPA rules that were announced on February 12th. That would be terribly market moving. And then there can always be a surprise cut in SLR. At the moment, it stands at 19.5. So if you get an FPI limit up and an SLR cut, then again, bonds will have one win, one loss, and maybe not much of a change. So in any case, there can be a lot of yo-yos in the market. Watch out for it.
Okay, that policy will be known at 2:30 p.m. Status quo expected, at least on the key rates. In fact, let's listen in to some opinion that we got from economists as well as policy experts.
The upside risk to inflation is concerned, which is in terms of the MSP. Again, I wouldn't worry too much about it. The fact of the matter is that the MSP is only as good as the government's ability to support that price. And the fact is that the institution's infrastructure is simply not there. You can announce any price you want, but the market is going to be doing exactly what it thinks it should be doing. It won't care about the MSP very much. So I don't think that is an immediate risk. It will become a risk if the government's procurement infrastructure or the deficit payment arrangements become stronger. Then the ball game changes, but that's not happening in the next season. I would probably be a little cautious, because as far as growth is concerned, you really don't have to be ahead of the curve.
We're sort of in the wait and watch zone, I guess, right now. Clearly, there are risks to inflation, like I said, because of MSP and oil. At the same time, the government is also trying to ensure that the MSP actually becomes an effective floor through some form of fiscal transfers to be made to farmers. So, like I said, I think government policies around food inflation are changing, because there are, their politics clearly, and there's a lot at stake because of the election cycle. So I think we have to be cognizant of the upside risk that poses both to the inflation and the fiscal outlook.
From February, we haven't got any news which is incrementally negative on inflation. Actually, we have got inflation number better for the month of February.
Time for all our movers and shakers then. Let's start off with JSPL. Well, that stock is trading with a gain of more than 6% in today's trading session. Importantly, it's trading above the 232 odd mark. Why is that mark important? Because that's the price at which they did their QIP. And for the last few trading sessions, it's been closing below that level. Now, the news that we got overnight is that they've got an upgrade. That's a ratings upgrade coming in from CARE. They're non-fund based as well as short-term working capital facilities. That's got upgraded. Now, in fact, they've assigned an investment grade of CARE A3. Earlier, it was CARE D. So, the street now is hoping maybe, in fact, they'll start borrowing at a lower cost. Whether or not that's possible, only time will tell. But that's the reason why, in fact, the stock is moving higher. In addition to that, remember the management joined us on March 28th. And what they said at that point of time, that the March production, is 70% higher. That's at the Angul facility, 70% higher than what they did in December. And they're saying the production run rate in Angul is going at around 185,000 tons in the month of March. So that's pretty good going as well. Now the street is hoping for two things. One is that they refinance their debt, the cost of debt. That's point number one. And the second factor is the sales volumes number they're focusing on. Remember, on the quarterly basis, they have been doing around 900,000 approximately. This time, the street is hoping with that they'll do a number in excess of around 1 million tons. And that explains why the stock has rebounded sharply in today's trading session. But I'll give you another stock as well, that's doing well. SmartLink, that's in upper circuit in today's trading session. Why is that? The board will be considering a buyback of shares on March 7th, 2018. Remember, the current market capitalization after the surge of around 20% is at around 242 crores approximately. Remember, this has really been a play of the cash that they have in their books. They exited a business around 5 years back. And because of that, their cash and current investments in their books is more than the current market capitalization. In fact, it is at around 270 crores approximately. Now, if they go in for a board approval, then they can buy back nearly around 13% of the current shares that are outstanding. If they go for a shareholder approval, that's then in fact that equates to around 25% of the net worth, and that equates to nearly around 33% of the total number of shares that are outstanding. So in either case, the buyback will be quite substantial, 13% as well as 33%. Remember, this is not the first time they announced a buyback. They announced a buyback in Feb 2016 as well. And the promoter in the last few quarters has gradually been increasing stake. In fact, the last recorded stake that the promoters have in the company is at around 74%. And that explains why the stock is buzzing in today's trading session. Keep an eye out on the buyback price, because that's going to be quite important from here on.
Okay. Thank you very much for that. Another stock which Mangalam was just pointing out is Avenue Supermarts, which runs D-Mart, and that stock continues to scale new highs. So now it's crossed that 1400 mark. Its market capitalization is close to 87,500 crores, which is at least more than 20 nifty companies, he tells us. So just on a roll for Avenue Supermarts ever since it listed. But let's move on and talk about ICICI Bank. The news over there just doesn't seem to die. And talk about ICICI Bank. The news over there just doesn't seem to die. Abhishek, what's the latest?
Well, Rima, to the exchanges, ICICI Bank gave clarification yesterday that the bank has not received any communication from Serious Fraud Investigation Office with respect to their ICICI Videocon case. They have also went on to clarify regarding a news that came in First Post yesterday. The article in First Post mentioned that ICICI Bank has given loan up to 650 crore to various Doodh companies which had a turnover of just 75 crores. On that, they have categorically mentioned that ICICI Bank is not the lead bank in consortium of bankers that have given money to Videocon way back in 2012. The bank has also not provided any individual facility to any of the Videocon group companies. So therefore, these news are false and baseless allegations made against the company. Back to you.
Okay, all right. Thanks so much for that, Abhishek. Well, let's hop across to Sonia. Sonia, tire stocks are moving around. There's a movement in rubber prices?
There is, and there are a couple of more factors which are aiding tire stocks. Nigel, let me run you through them quickly. First, of course, rubber prices have moved lower. So currently, domestic rubber prices stand at 123 rupees a kilo. That's actually a fall of about 6% since the month of January. However, overall, if you see, rubber prices have been stable. They haven't really moved much. A couple of other factors that could be leading to higher movement in the tire stocks. One, if you remember, in the budget, the government had imposed, that increase in customs duty on import of tires from 10 to 15%. That has actually resulted in lesser amount of Chinese imports. And I spoke to a few people in the industry. They said that Chinese imports have now come down to about 600 crores per annum. At its peak, it was at 1800 crores per annum. So that resultant demand of 1000 crores has actually been spread across the domestic industry, resulting in higher demand over there. But according to me, one of the key reasons for the surge in the tire stocks, especially the ones that are exposed to commercial vehicles, is because of the huge bump up we've seen in CV sales. CV sales were at a record high, as we know, and three companies that have the highest exposure there: Apollo Tires, MRF and JK Tires. Apollo gets 65% revenues from the truck segment, and it's the biggest beneficiary because it has the highest radial truck tire capacity, and the margins of radial truck tires are much higher than nylon tires. Also, in terms of valuations, Apollo Tires is trading cheaper than the other stocks. So just to tell you, Apollo Tires currently trades at around 12 times FY20, while CEAT and MRF both trade at around 14 to 16 times. So perhaps it's playing the valuation catch-up as well.
Okay, thank you very much for that. Yes, that boost or the pickup in CV cycles is really, improving the prospects of so many companies. Tata Motors has gained another 4.5% in today's trade, add to the gains that it saw yesterday. And separately, there is a possibility that the company could be a beneficiary of the US-China trade war. Remember, China has said that they will be imposing a 25% import tariff on 106 US products, which also includes automobiles, and the biggest exports from the US are luxury car makers in the auto space like BMW, Daimler, Fiat Chrysler, as well as Tesla. So with these cars getting more expensive in the immediate term, it could be a positive for JLR and therefore Tata Motors. So that could be another reason why Tata Motors is higher by 4.5%. But for more stocks which are in the news, let's hop across to Anisha. Anisha?
Well, yes, Rima, the advance decline is favouring the advances with the ratio being 6:1, and there are a lot of stocks like Indigo, MRF that are hitting fresh 52-week high. One such space is metals that is doing well in trade. So look at a JSPL, a Vedanta, a Hindalco, all up anywhere between 4 to 6%, as there was no negative news that came from US regarding the trade wars yesterday. In fact, there was a bit of positive news with the murmurs of negotiation and talks being on the table as well. So that's the reason that space is buzzing in trade. Moving on to Adani Enterprises, remember that went ex the renewable business today. In the morning, that stock was down about 18-20 rupees, given that is the value that was being ascribed to the renewable business. But it has recovered quite a bit of that because there was a bit of dip yesterday as well that we saw in that particular counter. The Bilcon, well, their track record of completing their projects before the date is on track, because that is what again they have done, and they are now eligible for a bonus of around 17 crores. That stock has been in a territory of its own, and today as well was up around 3-4%. Moving on to Ashoka Bilcon, they have been declared lowest bidder for an electrification order in Uttar Pradesh to the tune of 760 crores. L&T, they bagged an order of around 3,400 crores in the beginning of the day, and later also the hydrocarbon business won some orders. Lastly, on ITI, they have been declared lowest bidder for order worth around 3,200 crores, and that stock was also excited in trade. Back to you.
Okay, all right, Tanisha, thanks so much for that. Well, here's a quick recap of all the top buzzing stocks we covered. We had ICICI Bank, Smartlink, JSPL, we had Hindalco, Vedanta, Adani Enterprises, Ashoka Bilcon, L&T Construction, ITI, MRF, as well as Apollo Tires.
Okay, on to a CNBC TV18 exclusive then. We learned from sources that the CBDT constitutes a 5-member working group for examining taxation aspects of high net worth individuals. Timsi Jaipuria joins us on the phone line for more details. Timsi, over to you.
Yes, as you rightly mentioned, CBDT has constituted a 5-member working group for examination the taxation aspects of HNIs. Very clearly, the agenda of this group is to plug the loopholes in the laws which provide or which are aiding HNIs to evade taxes. The modus operandi has been identified as of now, that the HNIs are migrating from India to other jurisdictions, posing a substantial tax risk. So similarly, working group has also been formulated to position India on issues related to taxation, since these HNIs are migrating outside India, and that has caused a major concern for the government. Not just this, the group is likely to give recommendations to the policy wing of the CBDT to be incorporated as soon as possible. The meeting is scheduled of this group tomorrow itself to take a detailed consultation view and then come up with the suggestions that can be incorporated in the law. We'll keep you posted on it.
Okay, thanks so much, Simsi, for joining us and giving us all those details. In fact, Ruchi Sharma of Morgan Stanley told CNBC TV18 last month that India needs to focus more on domestic investors rather than foreign investors. Let's listen in.
Last year, 7,000 millionaires left this country, the largest number in recent times. The year before that, it was 4,000. So the number is going up of the number of millionaires leaving this country. Foreign investment is important, but it's really domestic sort of participation, domestic investors who sort of make a nation going forward. So I think that, to me, this has to be really sort of looked into, that why are so many millionaires leaving this country? And if you're happy about it because you think this is part of the anti-corruption drive, fair enough. But when the number is the highest in the world, at least as a share of total millionaires leaving the country, that should be a cause for concern.